Will the session at 1:30 be recorded? I believe it is. It's going to be Adam. That's for the what do we call that program? The after the FOMC program. What are we calling that? We'll get some feedback in here.
The
T-Buzz
playbook.
Rate Cut Playbook. There you go.
Yeah,
Good morning,
playbook.
Tom. How are you doing today?
I'm good. I'm trying to get caught up. But Chuck, I'm gonna pop back on here, and I think Adam's gonna play our theme. Once he plays the theme song, I'll come on, and then we'll get into the key numbers. I'll transition you for the key numbers. Okay.
All
So
right, that sounds great.
uh, let's uh, let's hear the theme, Adam. If you want to play it, get me going, and I'll be back.
Binoculars ready, chasing birds as they in the early light, before the rooster crows, T-Buzz sits where the ticker flows. A coffee cup, a steady hand. He speculates the market like a riverboat man. Oh, T-Buzz, he's trading his way through the peaks and the falls, come what may. With a gut full of grit and a heart that won't sway, T-Buzz, he did it his way. He watches the charts like the stars in the sky, looking for answers, a reason why. Some call it luck, some call it skill, but T-Buzz just calls it paying the bills. Through the red and the green, he's danced with the line, every loss and each win, a tale of his time. Oh, T-Buzz, he's trading his way through the peaks and the falls, come what may. With a gut full of grit and a heart that won't sway, T-Buzz, he did it his way.
Yeah, that gets me going too, guys and girls. I really do. Want to talk to you a little bit about the market itself. Last night, clearly I saw something that was pretty big, and I told people, especially my futures, I said it's Delta 50 time, and we had a big night if you took the trades and stuff like that. If you didn't take the trade, send an email to Roe@DTI Trader in the futures first, and I'll give you some individual calls, get you straightened out. It was too good. Okay. But this morning we had a SPX I extended the program. I told him I had some more I wanted to teach before I wanted to go full bore. We're going to kick it off October 1, so it's not too late. I've had Jonathan organizing the master classes I've done. My next section is going to be how to sell premium with the SPX XSP. This is going to be huge, folks. I've taken almost 2 months to teach people market timing and how to make it happen. So if you got any questions, or if you want to join, I'll have them post a link in here. The program's not really going to start October 1, and you can get in there and do the master classes before we meet next Tuesday. Okay, that's on the SPX class that I'm expanding. There it is, the beta. The beta program. Listen to this. Never before since I've been doing this have I had almost a 2-month beta program, because I got a whole bunch of people making a lot of money because they went through the training I've been doing online. I have it taped so you don't miss a thing if you want to join. And you got about 15 days until October 1st to pick up what we do. We meet on Tuesday and Thursday and try to take advantage of that. Now, I'm going to ask Jonathan to bring up the money maker, and let's set up, if we can, what we're looking at here. By the way, did you see the playbook paid for itself with that TQQ trade? How many people are smiling because they got into the playbook and took the TQQ trade we did? Scholarship for everybody. Break out the champagne. Jonathan Morse, he'll announce that. Let me get to the point of what we're doing and how we're doing it. I think that I'll get Jonathan to bring up the moneymaker, and yeah, that was the Battle House here in Mobile where I'm staying. Sam recognized it. How many people, speaking of that, how many people remember the Royal typewriter? They got one in the lobby. I took a picture of it. It's pretty good. Lester, why didn't you get the trade? Why didn't you get the trade? You already asked that question. Did you send Roe at DTI Trader an email where you'll make sure you getting everything, Lester? Okay. Well, Jonathan, get with Lester and make sure, because I'm gonna do another one. So I'll do another one on Monday. Okay.
Hey, Lester, I emailed you back. I don't know if the email went to you. I think there is an issue with the email getting back to you. Said your email was not able to receive my email to you.
Yeah, maybe you already used the old-fashioned way and talked to him on the phone.
Well, it was after the close. Lester,
yeah, I got you.
Anyways, okay. But Lester, it also might have depended on whether you got the initial trade from Tom. Might have depended on when you joined the program. So that's a possibility there. Anyhow,
don't
Tom,
worry about it.
Don't
worry about it, because I'll do another one on Monday. I'm going to do another scholarship trade on Monday. So make sure you get your email situation straight. All right, Jonathan, can we bring up the money maker and let's get this thing set and evaluate today?
Yeah. Was waiting for a moment to speak here. Of course, there's risk involved in trading. Tom, we're recording. Something's going on with YouTube connection, not able to do a YouTube, so I'll have to upload this session to YouTube after we're done. And just a note there on that. And we're bringing up the roadmap.
Yeah, past performance is not indicative of future results. Rudy's joined today. He says, make sure he's on it. He wants that scholarship. All right. Notice I've got 67.27 as a high point. That'll be the next stop if we break the current high. Current high is about 15 to 16. Last night went to 19, so you got to get through that. To the downside, I would use, to the downside, I was looking at that and thinking about it, Jonathan. Let's use 66 85 to the downside for the rest of the day, or until we get to the second half of the day. 66.85. Folks, that will frame between now and 3 o'clock. Jonathan and Chuck will post the new moneymaker numbers sometime between after 12 and 3 o'clock, okay? Now, what does that tell us? That tells us that if that happens, the QQQ goes to, 599, the TQQ goes to 102.88. Apple has resistance at 240.60. NVIDIA, hey, look at NVIDIA. NVIDIA might be a play. Let's wait to after Genesis to see how it shakes out. Google's got a target at 254, and MU looks like about 171.52, Jonathan, what I got right there, 171. Okay, as far as the SPX, 66.27 is the estimated low at 85. Notice that for SPX this morning in the class, I said sell to 6,600, 65.95 is probably at a nickel now, okay? In the SPX class this morning. Also said about the 660, 659 XSP for this afternoon. Probably can't do that one, but you can do a higher up one if you want to do the same day, okay? Yeah, right. I saw the NVIDIA news where they invested in Intel. Seems like everybody's buying Intel, government and NVIDIA. That's pretty good. Sherry, Adam, I have to give you a copy of the theme song. Yeah, we're going to miss on that one. I'm trying to make my mind up on, I'm going to give it a little bit more time. Yeah, PAS, it's, something's going on there. I got to look at it. That happens. All right, so we had a positive reference bar and the low of the reference bar. If you go back, Jonathan, given the low of the reference bar number for RB3.
S&P futures low, the reference bar is 66.70 half.
Yeah, and I said an 85. Didn't I set an 85 on the moneymaker?
Yeah, 85. That put it
Yeah.
below the open or
Yeah,
cash.
if it breaks that, then your next stop will be 75. Stocks that are interesting, Palantir, MU, NVIDIA is an interesting stock right now. It's, approaching its high of the day. TQQ is always interesting. Gold has pulled back and silver has pulled back 42. If it doesn't start moving this afternoon, we won't take PAAS to the barn. We'll eat it and run. All right, so what else y'all want to talk about before I go? Look at NVIDIA's nice setup there if it takes out the high. AMD, Yasmin, is going down. Something's going on there. I don't know. It's just negative. I looked at it earlier today. All right, so let's transition. We're in part 2 of the key numbers for Chuck Crow. The big news in part 2 is that he'll be teaching part 2 on key numbers, okay? Wait on Apple right now. Wait on Apple. 240.50 will be a trigger, David, on Apple. All right. The Retirement Center, make sure you get joined. We'll have a class tomorrow at 2. We'll have a class tomorrow at 2. And you can type it in there, Lester. Nobody else will see it. We're going to try to take profit if we can on the option we did in our retirement account. It'd be the second home run there. If we hit, row at DTI Trader. If you want to get a tasty trade referral and trade, what we do is we use that for education inside that retirement. Totally free if you want to join. Totally free. Got an in-person class Monday and Tuesday next week. Just had somebody signed up for that again. We'll have a nice class. I looked at the people coming. It's going to be great. That's next week. All right. Anything else that we got here, Jonathan, I need to talk about before I turn it over to the master, Chuck? Yeah, you get a free year of Futures First, okay? If you join, even if you sign up, say, hey, I don't know when I want to come, even next year, you sign up, you'll be given the first opportunity when I do post it, okay? The weekly letter, $9.99. Boy, that's growing. I hope we go over 600. I have to add up Adam to give me a gut check, see where we are on total subscriptions. Make sure you're in the Telegram channel. Chazzy, hello from Florida. You ought to come up to our class. Jonathan, cover this for everybody, would you?
T-Bow's weekly trade letter issued Monday after the close. If you have not been at the training trade sessions until now, you don't know what this is. It's a 1 to 2 page document Tom and I put together on the broad market. I'll give you a broad market update. Give you the key news for the week. We're past the key news for the week at this point. Any kind of key earnings. Earnings season died down a little bit, but we do have Micron next week. Weekly Magic 5 stocks or 5 stocks that Tom likes for the week with trigger numbers so you know when he's getting in, and then also the targets and stops for your support and resistance there. And then Tom gives a special opportunity of the week as well. Not mentioned on this sheet is you get a little look in at our MTI by DTI indicator on the Thinkorswim platform. You can see how most of the 7 sisters are setting up, like the SPY, the QQQ, GLD for gold, USO for crude oil, and TLT for bonds. How those are setting up on MTI by DTI. All that for $9.99, $9.99 for a year, a full year. And Adam posted a link. Thanks, Adam. If you want to get joined with that, dtitrader.com/weekly.
Adam, how many we have in there now? All right, we're almost there. Next stop, 600. All right, keep telling people about it. It's a great letter that comes out. All right, I'm gonna, Jonathan, take this over and talk about how everything looks and stacking up and why I'm so bullish.
All right. Get this updated first. September 18th. Time is 11:15 a.m. Eastern time. What this shows you is how these stocks and or futures are setting up based on our FTD algo. That stands for first 3 days of the first 3 trade days of the month. Every month, not only do you have a month open to go by, and it's very easy to use the month open as a pivot. If we're above the month open, think higher. If we're below the month open, think lower. We add to that with the first 3 trade days of the month. First 3 trade days, mark the high from those 3 days, mark the low from those 3 days. It gives us a frame to go from. It shows us stocks that are really showing strength for the month and actually trying to trend. So they're not only holding their month open, they're trying to trend. And that's what we got here on the S&P and the NASDAQ. And when that happens, most of your stocks are also going to be showing long. Now, when you get an outlier that says short while the indexes are going long, you really want to stay away from that stock for the month. That's how AMD is right now. You heard Tom say earlier there's something going on with AMD. Stay away from it. Well, it's right there painting the picture for you by following the numbers. Another one that's giving you the same cautionary tale is Berkshire. Berkshire. A great part about this process is next month is a new month for the stock to, try to prove itself again. So what we know is AMD and Berkshire are not acting healthy. Stay away from those. But most of these are looking pretty good. And that's because the S&P and the NASDAQ are both above their first 3 days. They're high from the first 3 days and above their month open, looking good. As we scroll through the list, I'll just do this real quick. See, mostly green. All the dividend payers are green except for Amazon. Amazon's the AMZW here, the dividend payer from Amazon is above its month open, but not quite strong enough to get above that 3-day high. Now, if you're looking at this spreadsheet right now, you can click the star at the top right on your browser to bookmark the page. And it will update. It will update when I update it. So you just need to have access to the sheet to view it. And then every time we're live, I tend to update it. All right. If you have the roadmap, this is taken directly from the trade tracker, which is under tables. So if you have the roadmap software and you're wondering about adding your own stocks, just open up that trade tracker, throw in the stocks you want to look at it, and then you're all set. So make sure you use that trade tracker over there on the roadmap. Any questions?
Well, folks, that's why I'm bullish, and I will continue to be bullish until you see a bunch of reds on this sheet. As Jonathan just mentioned, this is where we fish from, and we're not going to be right on every stock, but we'll be right on most of them. And we're very, very deliberate how we use this to sort of guide us throughout the month. And you don't get a track record like we've got, and unless you have that discipline, we're following through on that. So hope everybody has a good day as we listen to Chuck talk about key numbers.
And Tom,
folks,
before we get into key numbers, the issue with AMD, NVIDIA made a huge investment in Intel, so it's a competitive advantage market share type swing. You've got AMD on the losing side of that because it's NVIDIA making the investment. NVIDIA having a great day because they're the ones who are getting the advantage.
Yeah, this sheet is, we keep it updated, Klein, throughout the month. And all you have to do is have the link, even if you miss a point, to get it. So Chuck, I'm dying to learn about key numbers. Tell me about it.
Well, honestly, I think everything we're going to talk about, you already know. But for everybody else in the room, let's go ahead and get started with part 2. And yesterday we talked about this is where all those numbers come from. Now, we talked about these 5 major news pivots. I wanted to circle back to this because, of course, we got a new one after our session yesterday. So for those of you who weren't here yesterday, 5 major news events in every month. You have employment situation, CPI, PPI, GDP, and PCE. And 8 times a year, you add a 6th news pivot into the month, and that is the FOMC. So let's go ahead and look at that FOMC added list on our next slide. And you can see our 6 pivots. We've got 4 of them in this month. 65, 14, 50 for non-farm payroll, 65.41 quarter for PPI, 65.55 for PPI, or excuse me, CPI, and then 66.65.50 for the FOMC, and that moves the average up to 65.69.05. Now, one thing I want you to think about when you're looking at that average, we've got all the information, we know what's higher than what, but let's take a look at that average number, 65.69.06. Compare it to all the other pivots. How many of those pivot numbers is that average now above? And how many is it below? Get a sense of what the throttle on this market really looks like. So I'm asking the question, want to see if you guys know the answer. Let's see, the question here from Jay, is that where the ES was when the key news, the number is where we're trading, but the news, yeah, it's when the news was released. So we can go back. We know that a lot of those news items happen at 7:30 in the morning. In fact, most of them, the FOMC is the one that doesn't. So we're above 3 and below 1. Now, would you think of that as a market moving in a bullish direction or a bearish direction? It's bullish, right? So we get that. Now, yesterday we talked about stacking one number above the other. PPI was above NFP. CPI was above PPI. FOMC now is above CPI. So you've got that directional movement, but you also have with the average here, you see that the market is not moving higher, but it's moving higher through big steps. So it's a 100-point move from the CPI number last week to the FOMC number this week, helped out a little bit by the rollover concept, but still a very big move in the market. So that's where you're getting this sense of strength from. So let's go to the next slide, kind of get into that concept of comparative analysis. The relationship between these numbers is what we really want to focus on. That's where the rubber meets the road, per se. So where is the market in relation to X? We just did the average of the 6 pivots. Where is the E-mini S&P in relation to that average, which was about 65.96? But also, where is 65.96 in relation to the individual numbers? And that's the above 3, below 1. When to go ahead and do that part while you were still looking at the numbers. But relationships between numbers are kind of our focus. It's what we want to pay attention to, how they play each other back and forth. So let's go ahead and move on to our next slide here, Jonathan. And we're doing a broader look. I'm giving you not just the S&P, but many of you are QQQ traders. And these are the opens. And of course, yesterday we talked about you want to know your opens, but we also want to know, again, how they're related to each other. You'll see the color shading on this are year open, quarter open, month open, week open, and reference bar. This is reference bar 3. We'll have another reference bar. We'll have the Genesis bar coming up starting in about 6 minutes. And we're going to look to see if our open is above the RB3 open, which was 66.87. But you can see both the S&P and the QQQ giving you a nice consistent look at the market. The open of the quarter is above the open of the year. That's bullish. The open of the month is above the open of the quarter. Also bullish. The open of the week is above the open of the month. Continuing a trend here. The open of the day is above the open of the week. And the open of the reference bar is above the open of the day. So see how it kind of stacks up. We don't have any flags in here. There are no red flags saying, hey, we've got a question about this trend. This market is making a clear, unadulterated statement. We're going higher. Now that's for the ES and the QQQ. If you want to look at your favorite stock, you look at it the same way. Build that up, build that process up. In fact, for those of you who get DTI's pre-market planner, you'll notice a lot of that information is actually in the planner. It's one of the things that we focus every day. So this is not just an outside thing that we're looking at. you can get that information. You can build it yourself to understand, is this market building on its gains or has it simply gained? So that's what we're paying attention to there, that relationship. Now, it's not just the opens that we want to look at. We're also going to look at ranges. And let's go ahead and move on to our next slide here. And we're going to take a look at that side. So comparing the ranges, and this one gets interesting. It's a little bit different. And actually, it's not different anymore because the day high rocketed up. But the high points, high of the year, quarter, month, week, and day are actually all the same right now. So we should have realized that. We got to get an update on those slides, Jonathan. That's on me. Let me come in here and let's see. All of our highs right now are at 67.1975. That's for the year, for the quarter. Okay, is that not updating on your end? I thought that would actually change as I'm changing it.
Yeah, it will. Chuck, hey, sorry about that. Let me take this out of slideshow. Once we take it out of that, it'll update for you.
There you go. And our day high, 67.1975, and the reference bar high, the high of RB3, was actually 66.92 quarters. So let's just go ahead and we need to change the font from that red, put that back to simple black. But RB3 high was a little bit lower, saying, okay, hang on, things look strong, but pay attention. Now over on the lows, those lows still working here, and they are in fact building up. In fact, the RB3 low above the low of the day. So the low side, the back end of the trend is still intact, but that front end of the trend, and this is kind of a victim of its own success, right? All the numbers get pushed higher because the open of the year, the open of the quarter, the open of the month, the open of the week, the open of the day, when you make an all-time high, they're all the same. So you've got that side going on there. And okay, that we could go back to the slideshow, I think. We'll see if maybe some of the other pages have to be updated. And maybe a little bit. Maybe we'll actually no. I think we've got that. So as you can see in the ranges, reference bar 3 says, "Hey, hold on a second. I want to talk about this." Now the market went ahead and made a pretty strong statement, but it didn't get back above 67.1975. So we're slowing down a little. That's what the market shows us. Move over to our next slide here. Move away from comparing ranges, and let's go and talk about progression of trend. Now for this, we aren't going to look at those individual time frames that can kind of all go together. We're going to look at the market month by month and then week by week. When we go back and look at July, and I'm focusing on the S&P here, guys, but this applies to any market you want to look at, any stock you want to look at, sort of break it down this way. So we have July starting out as our standard on this particular slide. 62.45.75 the open, 64.68.50 the high, and 62.27 quarter the low. So we're not only looking for did we move higher, we're also looking for did we move higher in a trending pattern. So typical trending pattern, you're going to look at, if you're looking at a chart, we're always interested to see if we have a higher high and a higher low, that's an uptrend. If you've got a lower high and a lower low, that's a downtrend. And if you have a combination of the two that is different from one of those, that's kind of a neutral bar, either an outside bar or an inside bar, depending on how that turns out. Now, in terms of this market that we're looking at right now, our monthly trend for the past 3 months has been higher, and it would take the month of September getting below 62.39.50 to change that. Now, of course, you don't want to see that low get below the August open because that brings up another issue. But the trend right now seems pretty secure. Now, if we go week by week, kind of a similar situation here. Of course, we have that big bump up because of rollover. So high and low numbers are for the month. These are the total monthly numbers. Now, the FTD, when you're looking at those first 3 days, you're also looking to see if that trend is developing. We're looking here at a broader picture going back 3 months and a little bit narrower picture going back 3 weeks. And you get your first 3 days algo, and that kind of tells you a little bit something about how the market's performing as well. But we want to see if that trend progression is able to continue. So far, it has done an amazing job, and really, this market is not that threatened. So the question is, when we get to next week, are we going to be able to do it again? Keep an eye on the high of this week to see if that's the case, but also keep an eye on the low of the week, because anytime you're looking at a trend, you always want to pay attention to the back end. All right, so we got one more. We're going to look at the daily trend, and this one gets a little bit different. Here you start to see cracks in the armor. So looking at the past few days here, September 10th, 11th, 12th, and then we get the weekend, and then we come back with the 15th, the 16th, and then notice on the 17th, which was Fed Day, number one, we had a lower open. Number two, we had a lower high. And number three, we had a lower low. That is an absolute trend break on September 17th. And the response to it on September 18th, you've got that, again, lower open, but already that higher high at 67.1975 and currently a higher low. So we're sort of trying to get the daily trend started again, give it a nice little juice at the beginning there, that 67.1975 from last night. Now the question is, will the market be able to hang on to that and get back into the trend without breaking what we've seen on the month? So we've had a break on the daily trend, and the question is, does it filter out into the weekly and the monthly? And the weekly and the monthly look pretty solid. I don't think they're going to be in too much trouble, but you want to see that daily step up and get back in line with what we're seeing on the weekly and the monthly. So it's all about comparing. We want to compare and contrast and see, is this working out? Monthly trend, strong. Weekly trend, strong. Daily trend, let's go back on that daily trend slide, and not quite as strong. We got a bunch of red on September 17th, which was a little bit odd because we got some good news out of the FOMC, but maybe it wasn't quite as slam dunk good as everybody was looking for. Of course, we also then come back and make a new all-time high in the overnight session earlier this morning. Let's move on to our next slide here, and this is going to be where we start seeing how you could use Roadmap software to do some comparison. Tom talks about the moneymaker. Here's the moneymaker. Put this together last night. We're using 66.45 as the support number here, the sell area, if you will. And then since we did this after the 67.1975 high was set, went ahead and put that in. And you can see how these numbers react, or equivalent, the S&P equivalent, across the board. So we want to look through some of these markets. The NASDAQ has made it up to 24,816. So that's not quite as strong as the S&P. Still got a little bit of work to do. The low today in the NASDAQ, 24,495, staying above that support area. The Dow, you're looking for 46,653, and we made it up to 46,722. Got some strength in the Dow popping up, right? So we look at all of that to see how things are moving. Okay. So any questions you guys have? Because I think I was going through these slides a little bit quick. I want to make sure that you guys are able to follow along basically, this is a situation where we compare and contrast, and we compare and contrast different levels. So we compare and contrast the month, we compare and contrast the week, we compare and contrast the day. So, what do you guys think? Here's a great question, John. How concerned should one be when you have a day like yesterday? I'm not that overly concerned because I think a lot of that was a reaction to news, and I think that people were expecting more from the Fed. And the question is that expectation grounded? Does it make is it a very realistic expectation? I think the expectations coming in to Fed Day were a little bit unrealistic. We all saw, Jonathan had showed us the CB Fed Watch tool where we knew that there was um, over a 90% chance of a quarter point rate cut. I think it was about a 6% chance of a half point rate cut. And I think 6% of the people were extremely disappointed. And again, was that a realistic expectation? No, it wasn't. So, putting that into context, I'm able to sort of step back and say, okay, I see what happened with the daily, but I've got the monthly and the weekly backing up the trend. So I can sort of step back from that a little bit. So, is it critically important? No. Should I start paying attention? Yeah. Yeah. I mean, obviously, you always want to pay attention, but you kind of, hey, look over here, but that doesn't mean that's where you're going, right? So we got the warning, but it made sense that we got the warning. Now, if I get a warning that doesn't make sense, that's probably going to catch my attention a little bit more. This one was a logical warning to pop up. And the fact that we've already come back and made a new all-time high, um, I can sort of put that warning on the side. Let's see, what are we looking at? Can I explain the ES buy versus sell? Yeah, well, it's not exactly a buy and sell. I think of it more as support and resistance. And
Chuck, I've
what
been
we're
bugging them to change that because it just brings up more questions. But yeah, the
yeah,
buy should be resistance, sell should be support. But it brings up another good point that Tom usually trades with a trigger format, which is more like a breakout style format, if you want to think of the classic terminology, which is not something we use. But yeah, don't get confused by that buy and sell. It's really just support and resistance. Where Tom expects the market to go higher to and find resistance, and where Tom expects the market might fall to and find support down there.
yeah, and do we have a slide package representing the information? Yes, and Jonathan already posted those slides. Let me see if I can get a little bit more here. Progression, give a great format. Well, thank you for that. Appreciate that, Jay.
And on this progression, I'm glad we slowed down here a bit too. So I wanted to tell you as we go back and look at these slides that Chuck covered, this, if you have the roadmap, this is basically the format which you can find with the feature under tables called Research Key. It allows you to take a look at the market on a daily trend basis, on a weekly trend, on a monthly trend, in a nice table format that's very clear with the numbers. And you get a lot more clarity by looking at the numbers instead of just looking at a chart. Someone typed in something about if we could look at charts. Yeah, Tom's a big tape reader. And so a lot of our education is on tape reading and how to utilize the charts and start to think in that manner. You can always add charts in, and you should if you see the market more clearly that way. But we hope that you take away from our education that some tape reading aspects to the market as well. And that's kind of why we focus on this.
Yeah, charts are great, but the tape reading, it allows you to do something like you go to that money maker and you're not just saying get above the green line. You actually know the number that is the top of the green line. And most of the time you know that anyway, but it sort of emphasizes it, like that focus on numbers. I think gives you sort of a broader understanding of a little bit more complexity than just the bars on the page. The bars on the page, though, they do certainly push that image out there. And let me see what we're looking at here. Carolyn, yeah, with the FOMC, a lot of people were thinking 3 more cuts. I think what we got was 2 or 3. So it wasn't necessarily 2 and it wasn't necessarily 3. It was 2 or 3. It's going to be data dependent, but they didn't lock in 3, which I think was maybe a little bit of a disappointment to some people. But I think locking in 3 would have been a little bit unrealistic. It may end up being that way, but we know that the Fed is going to be. Listen, the greatest criticism of Jay Powell is a Fed chair. He's a little bit slow on the pickup, a little bit hesitant to move. So the fact that you're reading this and saying, well, he's not as aggressive as I would want him to be. He never has been as aggressive as you want him to be. So I do think we can sort of chill out on that a little bit. It was an unreasonable expectation. That doesn't mean that we won't get 3 by the end of the year, though. So we'll see how things play out. We'll see how the markets develop. And let's see, since resistance the day at which RB is most likely for you to buy. The most recent one, Jackie. That's always going to be the answer. Which reference bar is the most important and the one that's going to point me toward my decision making at the time? The most recent voice. So yeah, we develop that understanding as we go throughout the day. Markets are not static, and neither are we. And yes, the research key can be used on stocks. It can be used on anything you'd like to trade. So, Jonathan, I think that is about the time where, am I turning it back to you?
Yeah, sure. I just want to make sure you were done covering everything you wanted to cover. I think
I'm
you did.
good. I'm
Covered
set.
everything. Yep. And Chuck just mentioned the potential rate cuts that are ahead. That's what the T-Buzz rate cut playbook is all about. Tom just introduced it this week or last week. And from my understanding, Chuck, you have a bonus session this afternoon. Is that right?
Yeah, we're going to be getting together at 1:30 Eastern. So we need to start preparing that. Maybe
Yeah,
I need to make some slides. No, I'm kidding. We got everything all ready to go. So I'll see you guys at 1:30.
okay, good deal. That sounds good. Yeah, 1:30 Eastern time. Chuck's going to hold a bonus session for the rate cut playbook. Tom's doing a little traveling today. I don't know if you know this, but I know you know this, Chuck, but everybody else, he traveled to Mobile this week, yesterday, and today he's going back to Jacksonville. So a little bit on the road, out of pocket, but we're going to enjoy Chuck's bonus session at 1:30. I'll be there and we'll hear what Chuck has to say. So if you're part of the T-Buzz Rate Cut Playbook, look for a notification on that. That's about 2 hours away or so, I think, if I do my time right. All right. Tom's obviously very, very experienced. That's why we're all here. 40+ years trading the markets, probably closer to 50 at this point. All right. And of course, with the market, comes rate cut cycles. The interest rates, if you had to narrow down importance in the markets to 3 things, interest rates would be on that list of 3 most important things in the market. So we're entering into a rate cut cycle. How significant, how long will it last? We don't know. But we do know that the cycle has begun. We lowered interest rates this week by a 1/4 point. Not we, the Fed did. And so we have this rate cut playbook that when you join, we have 2-hour sessions covering just, it's going to be jam-packed. It's going to be tough to, hopefully there's not a lot of multitasking going on because it's going to be a ton of information during those 2-hour sessions. Next week on Wednesday and Friday is when those sessions happen. Of course, the bonus session today at 1:30, but Tom will be live next Wednesday and Thursday for sessions that are going to be 2 hours in length. And Tom usually offers bonus sessions himself. All right, so I wouldn't be surprised to hear some bonus sessions. And of course, he will offer trades. But the focus is really on a 12-month focus, how to get prepared and manage your portfolio essentially on a 12-month basis looking ahead. And so while Tom always issues up trades for the short term, can't help himself when he's live, he's got to be trading. will definitely be trades. There's already been one on the TQQQ that was able to hit profit this morning. Again, the focus will be more longer term, but Tom's always given short-term trades, so it's kind of a double bonus there. Here's what we're going to cover. 10 stocks Tom expects to outperform, including specific sectors that are most likely to lead after rate cuts, how to filter for strength and momentum, kind of the next step there, finding what stocks out of those sectors are going to be your leaders, and of course, building your own watch list. Then trading the Fed meeting itself, how to position before the announcement, what to watch during the press conference, and timing entries and exits with discipline. There's 2 more Fed meetings this year. Something tells me a few of our bonus sessions might be revolving around those final 2 Fed meetings of this year, one in October and one in December, I believe. Now, another step to this class, this rate cut playbook, is dividends as a multiplier is the topic here that I chose. Bullet points why dividends matter more as rates fall. Top dividend strategies for stability and growth. Everybody likes that. And compounding payouts into bigger positions. Then, of course, we got the 12-month playbook. It's the month-by-month rotation plan is what Tom's planning to do here. When to really press on the gas harder. Tom enjoys the pyramid strategy, which is you kind of probe the market, and then as the market pays you, you really start to step up your risk. When when your initial risk is being proven correct, your initial bias start pyramiding in. That's a old Livermore technique. I think most people would say there. And then adapting if the Fed changes course, and that's going to be. We'll see how things go. That might be the most important aspect of this playbook is adapting if the Fed changes course. So again, I mentioned 2 sessions next week, both 2 hours apiece, one on Wednesday, one on Friday. I'm not sure we have an exact time yet for those, but we will, you get an email and a text message alert if you join the program. So be on the lookout for that. That includes today's bonus sessions at 1:30. I'll get an email and a text message out to you with a link to join the session on 1:30. And we will be recording, by the way, that 1:30 session. Tom didn't charge $497 for this. We have some great students at DTI. This was from our Sawgrass event a couple years ago, holding up. That was actually Carol's idea, I believe, to make those T-Buzz Talk and Trade hoodies. I think they're hoodies. They're real nice. Nice little logo on there too. But Carol, she says, thank you. Education is the key. I was completely averse to the stock market, and now I think it is fun. And if you ever meet Carol, she portrays that, every second of the day we're talking about the markets. Here's Deb. Deb's been a longtime student with Tom and DTI. Tom is so amazing, she says, an absolute genius. One of the most patient and thorough educators she's ever encountered. He wants every single one of his students to not just understand what he's teaching, but to succeed at trading. I think that comes across pretty clearly. The fact that we're here every day for Train and Trade, for an hour or 2 every single day. We believe in educating. And then Carlos says, Tom, you have a gift and you have been enabling people and changing lives. Carlos is a great student. He's always there at the live events. And he contributes. Carlos steps up and says, hey, can I help with this? Can I help with that? So we love Carlos. Hopefully he'll be there at the next one. Now, Edwin has also been a longtime student. He says, just wanted to thank you for another awesome DTI event. Closed out trades this morning that we have entered into the conference. Once again, pay for the trip. If you're going to be successful, you will probably end up here at DTI. So something with our live events. We have a live event next week. Tom's always given trades during the live events with the goal of allowing you to pay for the class. And not only learn while you're there, but make some money. Here's your bonus today at 1:30. Chuck's going to be hosting a special session to analyze the current rate cut and key market levels you need to be focusing on. So that's 1:30 this afternoon Eastern time. If you want to get joined today and be there at the bonus session today and the 2 live sessions with Tom next week, you can go to dtitrader.com/cut. Lovely name there for the rate cut cycle. dtitrader.com/cut. I'll get that link into the chat. And in a moment, we're actually going to replay last night's midweek market update so you can hear Tom talk about what he's going to do. Pick up a few more insights from replaying Tom's session last night. So again, thanks for being here, everybody. We heard from Tom and we heard from Chuck. It was a good session. Thanks, Chuck. There's the link in the chat. I'm going to go quiet. We'll play the recording, then we'll shut down the room. See everybody at 1:30 p.m. Eastern time today that's involved with the Rate Cut Playbook.
Right now that you don't want to miss a single day here at DTI, because every day builds upon the next. Pay attention. The rate cut cycles have started. Wealth building opportunities are here. Between now and we kick off this class that we got, we're going to have some really detailed information for everybody that's part of it. Now, if you don't know what to do, we're the class because we're going to lay it out for you. Many people think the mistake that when rates go down, everything goes up. That's not the case. We'll identify what's not going up in this rate cycle. You got to know where to put your money. We want to know. We'll show you what we think, and you can follow along. Now, some stocks and some assets will go up like a rocket ship. That's where we want to play, in that ballpark. Others be like a poison pill in your account. We want to avoid that. A single rate cut can create new leaders pretty much overnight, and the cost of inaction is just too much to talk about. You've got to take action during this stage. Let me just tell you something. I've been trading for 40 years. There's certain events that happen in the market, certain cycles that happen in the market that put the odds extremely in your favor to take a small amount of money and make it a big amount of money. This is that cycle. Pay attention. Look at that chart there. Red line's the Fed funds rate. Keep your eye on that. Look what happened the last time there was a significant cut. Rocket ship higher. It's going to build, and just think about this. Depending on what and how much it's cut between now and next May, when we get a new Fed chairman, they're going to follow up with more cuts. When the rates climb, the market's going to run. This is going to be a run, and you got to be part of it. Where do you go? In my opinion, the rate cut cycle has started. It's the best opportunity we've had in years when you got this going for you. We'll help you prepare with our rate cut playbook. We'll teach it next Wednesday and Friday. Perfect timing after this Fed announcement to give everything to digest through to get what we want to take advantage of. I've been doing this a long time, folks. I'm not blowing a horn, except when we can make money, the horn is blowing. Do you hear it in the background? Getting louder and louder as we approach next week. There's no other class where you can learn the ropes of trading rate cut cycles and take advantage of what happened today. Let's take a look at what we'll cover. We'll find the best 10 stocks to ride, sectors to ride, and how to know strength and momentum to build that watch list. The next Fed meeting will be traded before and after, what to look for in the next one, and timing entries and exits with discipline. Dividends. You know, I haven't never been over my career a dividend player. I moved into the dividend area. I say thanks to Carol, she got my attention when I audited her account, and we've got a play going on right now in dividends, getting stronger. The 12-month playbook, we'll talk about how to rotate your stocks, when to get aggressive, put that pedal to the metal, and when to back off. We'll do these classes in 2 sessions, and we'll make sure that we don't charge you the $497 we have in the past. We're going to cut it down, and our track record in education speaks for itself. If we're teaching, you better listen. Listen to these love letters from some of our top students. Carol, what a story. Wait till you meet her. You'll meet her next year at Sawgrass. She wouldn't miss it for anything. But if you come to a small class, you might catch her also. She comes more than once. Or Deb, her co-partner. These two hooked up a couple years back, become great friends, work together, and I believe if you get any time at all and you're around these two, you're going to learn something. Carlos, if you got him in the group, now you got a real bunch of people that's going to help you. They want to help by talking to you and telling you how to avoid mistakes they might have made to make your life a lot easier. Edwin. Who knows Edwin? Who's seen Edwin at our classes? He's been with me over 15 years. He doesn't miss it when he gets a chance. He's a very serious investor. And if you've seen him, you know what I'm talking about. He's a super guy to have part of our team. Now, a lot of students have paid a lot of money and they keep coming back. There must be a good reason. We got some good stuff. Now, get joined and tell me how we helped you. It gets us going when we hear that kind of information feedback. Now, the price is going to be at half of what we normally charge, actually more than half. $199 fills out the roster. Get on board, start looking and preparing. Just like July 21st was a kickoff date for the general market, every day from now on is headed towards that big goal in the sky. I was trying to say the sky. Sign up at dtitrader.com/cut. If you got any questions, you can call 904-706-3532. Now, tomorrow at 1:30, I've got to ask Chuck to analyze in a special session the current rate cut, key levels to look for in the future, and things you need to be focused on. That is worth a fortune. Be there for the bonus class. Get involved tonight. Prepare yourself for the next week's session where we lay out the 12-month playbook, tell you how to do it, tell you how to pitch, meaning pitch stocks that are not performing and staying with stocks that are. Narrowing it down as we go towards that goal in the sky. There's the playbook. Straightforward, nothing hard. We'll get kicked off tomorrow at the opening of T-Buzz in the morning. I'll lay it out for you. I'll talk about the 5 stocks tomorrow that's going to perform, and we'll just go from there. It's going to be an aggressive day. I hope you're around to take advantage of it. I know I'm going to be, because we've got the risk out of the way. The Fed cut rates today. And it's not something overnight. It's something that lasts. So the cycle has started. What does this do? It helps the housing sector. It helps mortgage rates. It helps interest rates at the bank. Gives company more money to spend. And it puts you in a situation that you can sharpshoot your way to growing your account. Doesn't everybody here want to grow their account? I mean, that's why we do it, right? Well, guess what? Everything's a green light go, and we're going to take advantage of it. All we got to do is get through the night, be above 6680 tomorrow, and I'll lay out an aggressive day. Any questions for me before I wrap it up and say get signed up? Adam, you need everybody to sign up tonight where you get the email out that sets them up for tomorrow's class, right?
Yep, that'll be the best thing to make sure you confirm you have access. Go ahead and get signed up tonight. And we'll, once Tom is wrapped up tonight, I'll also replay it for anyone that got here late.
Yeah, I'm pretty excited to hear it myself again. I mean, I think it was exciting. I think it takes us to the edge. I don't know about you, but like I said, in the morning, we're going to kick this baby off. Let it trade through the night. Be patient. Watch things trade. Watch stocks that trade at night, and do it. The recording be put on YouTube. Let's have a good time and make it happen for everybody here. Adam, thank you so much. I'm done. I will see you.
So did you know that some of the biggest